What's going on, everybody? Jeff here. Welcome back to the channel. AMC bouncing strong off that $22 level of support mentioned in a previous video. The entire market reacting very strong to the upside on better than expected CPI and PPI numbers. You've got mainstream media headlines and the White House telling you that inflation is peaked. Good times for the economy are ahead. However, when you take a closer look at these numbers, you can clearly see that inflation is still steadily moving higher and higher month over month. It was just one downturn in one sector, pulling back that entire headline number. In this video, I want to talk about AMC, specifically when it comes to how not to get burnt over the next 2 weeks, because I'm seeing a lot of call flow coming in. And I want to talk how, even if the price stays constant on AMC, how you could lose value on your options. Now, while the preferred equity dividend is completely unique and customary to AMC, it relates more specifically how options react when it comes to any type of event, such as earnings, announcements, splits, you name it. I'm going to cover everything you need to know in this video. So let's get right into it. Before we do, can we just take a moment to look at Apple? We are in the middle of a bear market. The economy has been in 2 quarters of economic decline, and you have a mega cap such as Apple that is trading less than 10% away from all-time highs. Really ironic to see in this type of market. So really quickly, I want to cover the CPI numbers. In my opinion, it is very important, and I want to educate everybody because we have a lot of time on our hands. All right, now if you look at these numbers a little bit closer, you can clearly see that inflation is still moving higher month over month, okay? July versus June. You can look at the core CPI. While the 5.9 was a little bit less than expectations, it's still 0.3% higher in July than it was in June. All right, now the reason why this headline number was as low as it is I'm sure you can tell, if you drive a car in the United States, is gas was less than in July than it was in June. And by these highlighted numbers, you can see where that pullback dragged the entire, headline CPI number down. There's a couple things to keep in mind. There's 3 really big things that are sticking out to me. One, you have the 1,000,000 barrels of oil that are being released from the Strategic Petroleum Reserve that's going to end in November. Combine that with home heating oil is going to have such a higher demand, not only from the United States, but from Europe, probably around that October timeframe. It's going to begin. All right, maybe late September if you're up, really far north. Okay, but let's say October, and it's really going to get into full throttle in that end of November, December, putting a lot more strain on the demand. Last thing, you've got Warren Buffett that has consistently been going long on oil stocks such as Oxy. I'm telling you, that man has a bit of an inclination. While he can make plenty of mistakes, okay, and make plenty of errors, he has a bit of an inclination. And while I do believe that oil has not, officially peaked, or this is the bottom of oil, just because we're getting into the winter months and because of some of the other factors that I had mentioned, especially the Strategic Petroleum Reserve, that 1,000,000 barrels a day. It's a good inclination that, listen, this number is going to be a little bit higher. All right. And if the rest of, all other commodities, everything, the core CPI is continuing to move higher, you can expect that headline number to move even higher. Okay. So keep that in the back of your mind over the next, few months. Now let's get into AMC. Let's take a look at this chart real quick before we talk about the options chain. It's going to be very important. If you're holding any options, I'm going to, just be careful. And if you're looking to buy options, just know this. So we bounced really strong off this $22 level of support. As you can see right here, we're trying to test that 26, 27 breakout to continue to move higher to the upside. Now, market makers have been known to trip over their feet. Okay. It's pretty much when a gamma squeeze occurs, when they need to do rapid buying of shares, okay, in order to stay delta neutral. However, there's one thing to point out. Now, this chart right here shows the implied volatility. The implied volatility is what is used when it comes to factoring in the price of an options contract. And one of the resources and tools they use in order to get that IV number is, what is the implied move, right? How much is AMC expected to move in a given time frame? Now, if you remember back in June when it moved, $30 in a day, the IV was absolutely insane because we watched how it could literally move 100% in one day. Now, the IV is not that high because we haven't seen that yet. So therefore, it has been priced in. However, it's steadily continuing to move higher. And you can see that ever since the end of the month, where we are right here, it's continuing to move higher, meaning you are paying more for your call options. Okay. The same call options, if it was the same strike, AMC was the same price, if everything else was constant, okay, you're paying more for them. Now, what happens after an event? And the reason why I'm bringing this up, and I don't have screenshots of this, but I'm sure a lot of you can go back and look at this, or I'm sure many of you already look at this, is the amount of call flow that we've seen, especially out of the money call flow, has continuing to increase. And while that can help move the price higher, especially if individuals are buying those $25 calls at $22 support, and now it's running in the money. It's going to help when it comes to hedging in order to stay delta neutral, and therefore market makers have to go to the market and actually buy shares. That can help boost the price to the upside. The problem is if AMC's price stays constant, all right, let's say at this $26 level at the split, okay, or I'm sorry, not the split, at the dividend date, the price of the value of the options contract is most likely going to be less, okay? And that is because the implied volatility is going to drop. You watch this happen all the time on earnings, okay? Before earnings, if you're holding calls, if you're holding puts, depending on how much the expected move it's going to be, right? The price might stay constant, but the next day, even though you're still 5, 6, 7 days away from expiration, the value of your contract drops dramatically, right? So if you are holding options anytime after the 15th to the 22nd, just be cautious of that, all right? Now, there's also the contrary, and I mentioned this at the beginning of the video, that market makers, they're known to make mistakes, okay? And basically, when they don't include enough IV, okay, or factor in enough IV and basically anticipate that big of a move. And when a massive move does occur, that's when the options contracts completely go bananas and market makers are literally stuck just tripping over their feet. Okay, so there is the contrary to that. But just know that if you're holding options over the next few days, what is likely to play out. Okay, now I still do expect a little bit of a sell the news event. I'm sure you have individuals, okay, retail traders, maybe even funds, okay, maybe even market makers trying to abuse some of this in order to buy AMC, hold it through, all the way through the dividend date, whether it's holding by the 15th, by the 22nd. Let's just use the 22nd in order for safety and for clarity. They might potentially hold it through that, and then when they get their APE shares, potentially dump their AMC shares. That is also a possibility. Just know that going over, or keep that in mind going through the next 2 weeks. So that's it for this video, guys. I'll see you in the next one.